You are listening to the Critical Mass Radio Show, Orange County's business talk show, focused on exploring topics of interest to CEOs who are leading middle market companies. With your host, Richard Franzi.
Hello and welcome to Orange County's longest running business talk show. And yes, I am your host, Rick Franzi. And boy, do we have a good show planned for you today. Why do you ask? Because Alexander Harmsen is my guest. He is a serial entrepreneur. We're going to be talking about his latest venture and his latest product. His latest venture is Global Predictions, and his latest product is Portfolio Pilot. And so I'm excited to get into all of that. But before we do, Alexander, welcome to the show.
Rick, thanks so much for having me. I love the intro.
So let's kick it off with your origin story. Take us back in time, and let's go back I said you were a serial entrepreneur, so let's go back a little bit and talk to us about what I think of as your entrepreneurial journey.
Yeah, in the beginning, I did my education in Canada, engineering, physics, and economics. And so I think part of me couldn't quite decide what to study, but what I really liked was taking very complex systems, turning them into mathematics, modeling, software. Really got into machine learning, in the very early days before it was deep learning, before it was large language models and ChatGPT, before it was cool.
Right.
And I worked for a number of different startups, Silicon Valley. At a certain point, I was the first software engineer at a drone package delivery company.
Wow.
Right around the time when Amazon announced that they were going to officially launch package delivery, and by 2020, the sky would be filled with drones and half of your packages would be delivered in your backyard. Obviously regulations, were a little slower than that, but we flew in Papua New Guinea, and we flew in Bhutan. I met the Prime Minister of Bhutan, together with the WHO, delivering vaccines through the mountains. It's very exciting.
Right.
I think that was sort of my real first taste at startups. What do it take to actually build tech, from nothing, build a product, build an industry, that really didn't exist at all. I worked at NASA for a bit after that, the Jet Propulsion Lab, on a really cool computer vision project for what came to be known as Mars Helicopter, a little drone that landed on the Martian surface years ago.
Seen it.
That took 8-9 years to go from the R&D that we were working on, computer vision that we were working on, to eventually arriving with the rover on the Martian surface. And then in 2015, I started my previous venture, Iris Automation.
Mm-hmm.
And I'd got my pilot license a long time before. I was really into saw the opportunities in the drone space. There was a whole bunch of computer vision and cutting edge AI that I was exposed to at NASA. And I think things just sort of, aligned. In hindsight, it always feels like, these were exactly the stepping stones I needed. In 2015, I started a company called Iris Automation. And basically, it became very clear to me that, if we were going to have hundreds of thousands of drones in the national airspace, package delivery or agricultural surveys or mining exploration, or 1,001 use cases for commercial aviation, commercial drones, that they would need collision avoidance systems on board.
Mm-hmm.
And how are we gonna build collision avoidance systems? That's basically what we built with Iris Automation. I think every single other person in the entire industry assumed that this would be solved by miniaturizing radars.
Mm-hmm.
But I was crazy to think that, that was still 10, 15 years away. They were still extremely bulky, power intensive, and you could potentially just solve this problem by, taking some of these AI computer vision algorithms and seeing the world the way human pilots do, with a bunch of cameras. And so, fast forward 6 years later, we had raised $25 million, grew the team to 50 people, 3 offices across the country, San Francisco, Reno. We had a big a flight operations team in manufacturing, a regulatory office in DC. We, sold, we had hundreds of customers all over the world. We got regulatory approvals in 9 countries, and then sort of opportunistically sold the business in 2021. And then, in 2021 was sort of the height of COVID. My wife and I decided to have kids. We have a 3-year-old and a 2-year-old now, 2 boys, super cute. They're like sassy and like independent. My wife runs her own business as well. And, she's built a company called Very Sim Life. They basically built a digital twin of the human body for drug development. Wow. And so they can predict clinical trial success of compounds before you announce the results, before you even put these compounds in animals. As you can imagine, super, super impactful. But sort of we bought a house, and I think as you do, with a little bit of liquidity, we started talking to financial advisors and private bankers and wealth managers. And I honestly, at first, I thought we were just getting introduced to the wrong people. Mm-hmm. And they weren't quite the financial experts they portrayed themselves to be. I couldn't stomach the 1 to 2% fees that they were paying. It wasn't even tied to performance. It was just no matter what they do, they take the fees. Felt like there were conflicts of interest. And then, the alternative to that was like 1,000 trading apps out there, but I didn't want to become a day trader and do this full time and make it my hobby. It's kind of interesting, and I've dabbled in, a bit of trading and speculation and crypto and all that, but doing that full time, I just could not imagine that. And so I took out my coding gloves, for the first time in 5-6 years, and just built something for myself, and sort of hooked up all my different accounts, and built these macro models, and there's a bunch of like machine learning forecasting models that I dove into. There's like these dynamic factor models, what the Fed and other central banks around the world use to think about interest rates and inflation and GDP and, this sort of, macroeconomic modeling. And it sort of hooked it all together. And, there's all these different tax optimizations. And I don't know, there's something like $10 billion of heavy infrastructure investment over the last 10 years. And so there's lots of these tools that I could put together. And I had a system that worked pretty well. And like the thing that I really wanted was, to use some sort of, AI, hedge fund inspired models or modern portfolio theory, and then personalize it to my specific situation and goals, and then run through, a million different scenarios to come up with, Alex, here's the 4 things you should do, in February of 2025. And it took, 6.5 hours to run, mm-hmm. But who cares? I let it run. And, we went out for dinner, and then when I came back, there was a couple different options, and I didn't like option 1, but 2 and 3 and 4, sounded pretty interesting. So let me do that. I think I wasn't really trying to build a new company. I think it was just like felt like a gap in my own life. There wasn't really any other tools out there that offered what I consider opinionated insights, right? Like I want this tool not just to, I don't just want to have a screener to run through everything. I want it to tell me, you should do this for these reasons. And then, here we are 3 years later, and, we went through a whole bunch of different pivots. I never really expected to be building a consumer product company, but ultimately, we sort of went roundabout. I thought I took some of this original tech and we turned, we sell the forecasting models or the simulation tools, or maybe this is a great tool for the wealth managers themselves. And at the end of the day, we ended up just productizing this consumer application and, real personalized, opinionated financial advice for self-directed investors. And that's ultimately what turned into Portfolio Pilot.
So there's a lot to unpack there, and and thank you for that. That was so interesting to listen to. I'm sure our audience enjoyed the journey as well as I did. So let me back up. First, let me say, I love it when I have an entrepreneur on the show who built a company based on a personal need. I think that's so fascinating. But my question is, when did the light go on for you, and how did it go on for you that not only was this scratching your itch and solving your problem, but there could be a business here that is worth your time to invest in?
Yeah, excellent question. I think it's easy to go back in time and tell the story of, like, you know, it was a Tuesday and there was rain outside and it was 3
Yeah.
p.m. and it just inspiration struck. But in reality, it's like, I think it's lots of little things.
Mm.
Even if I'm on a call with customers, I think it's more likely that the difference between where we're at right now with, only $30 billion of assets on the platform and, $30 trillion of assets, the difference is going to be 1,000 little changes, and it's not going to be like one major insight. I think that the craziest thing with this, though, is that I built the original product for myself, and then, I started just talking about it with friends and other people I spoke to. And I don't know, 2021 was sort of just like a year of interviewing people and talking to investors and trying to figure out what I'm going to do next. I knew I wanted to start something else, and it's useful to have a good track record, of course, to start the next thing. But I think I really resisted the idea of building some consumer company. I think mostly because it feels hard. There's 1,000 other investing apps out there, and so what is my thing going to be that's different than everyone else out there? I don't really like to compete. I like this Peter Thiel like mantra of, like, competition is for losers. Like, you should find a niche that doesn't have any competitors, because then you're almost guaranteed to win. And so I didn't like the idea of going into a crowded market. I always like the idea that, like, if there's massive inefficiency in the world, that if there's unnecessary middlemen, then that feels like a great place to accelerate human progress, to eliminate waste, at a absolutely massive scale. And so it felt to me originally, in the first year, that the main problem that exists in the world is that we don't have good forecasting models, like macroeconomic forecasting models. And so, that basically the best forecasting models that we have access to are like a bunch of experts at the IMF that put out like an annual report about like where the world is going. Or like every bank in the world sort of has their own estimate and forecast, but like they sort of coalesce around the same things. Mm-hmm. You can't take these forecasting models and plug them into your business. Every major company around the world hedges, does currency hedging, and hedge funds, even if they have a winning strategy, they hedge against like the macro events. Mostly everyone says like just hedge against it, and there's a cost to hedging.
Yes.
You have to buy options or you have to buy swaps to be able to hedge against like this macro risk. And so if we know what's happening in the economy, if we have these early signals of inflation, the Fed could react faster. I don't know, it just felt to me like the current standard for macroeconomic forecasting was nowhere close to where it should be for the world to actually predict, react, control. Even though you have a few like massive systematic macro hedge funds like Bridgewater that mm-hmm. seem to have incredible models that they're just not sharing with anybody else. And so, what if I could build a Bridgewater type macro model and then commercially make that available? I feel like that would be worth hundreds of billions of dollars, right. Even though Bridgewater is only extracting, $10 billion per year. Hmm. And so it feels like you could build $1 trillion company out of doing like the same type of modeling. Like, it doesn't need to be reinventing the wheel.
Right.
Just changing the business model and it's crazy. I realize it's crazy what I'm saying, right? Predicting the future of the economy and all that. But that was the original thought. And I built a lot of the forecasting models and showed that, at least like in the back tests and the forward-looking tests that we were running, like it seemed like the forecasting models that I built in 2021 were better than like some of the best commercially available IMF forecasts. And we ended up winning like an international forecasting competition. And so that was a massive deal. The problem is no one believed me, and it's really hard to prove. And no one really wants to buy this. And mostly, I think, because like, if you have this model, you should just build a hedge fund. Like that, I heard that answer so often.
Right.
And then, and so, okay, I started thinking like, okay, what if we attach this to portfolio management tools and stocks and ETFs? And, I have this side project for myself anyway. And so I thought, if it seems crazy to eliminate, a $240 billion human advisory market, and so what if I just make it 50% more efficient? The main problem with these human financial advisors is one, that they have relatively low margins, which means they can't really, like, it's hard for them to have fee compression and like lower the fees, which is ultimately like what it means to reduce the middleman or take out this unnecessary waste, or make them way more personalized. And so our models, could have an individual human financial advisor, instead of managing 50 clients, give, with a single portfolio, potentially manage 300 clients, but with individualized portfolios and individualized advice. That seems like it would be a lot better advice to people's individual scenarios, and their costs would decrease by an order of magnitude. Win-win.
Right.
And so I tried to sell it to financial advisors and wealth managers and had hundreds of conversations, and they didn't want it. They said, like, our current setup is wonderful. I need to do relatively little work. I'm basically just a salesperson. I can use your software and your models and the fact you have these award-winning macro whatever. I'll use that in my sales pitch. But then as soon as they're in the door, like, I don't want to give personalized advice to 300 different people. You know how many phone calls I'm going to get from people asking, hey, why did my stock go down today? Why did you pick this? I don't want to answer all those questions. I want to send out like one quarterly market summary. That's the easiest way for me to sort of control, 50 people at the same time. And, I don't want my fees to come down. Like, actually, things are in a good situation. I don't want it to change. I think that people say they want to change, but I don't think people really want to go through change. Right? They resist it at every step.
Right.
And so I think finally I relented and I said, okay, if definitely it needs to change. And so if no one else is going to change it, then I'll just do it myself. And, basically we turned this product that I was using for myself, and already sort of at this point, 20, 30 friends were using it. It didn't take that long to personalize a lot of the settings, add a proper onboarding process, make it look nice, increase the speed. It doesn't take 6.5 hours anymore to compute the recommendations. Now it takes 10 to 15 seconds. And so, it's this massive parallel process. We do a bunch of caching and pre-computing. And then crucially, the big thing that we needed to get is regulatory approval to operate as a registered investment advisor, to actually give opinionated financial advice and charge for it. And so that was sort of a 8-month process. And, me and my co-founder needed to actually write a Series 65 exam, become investment advisor representatives, with the SEC, so that we can babysit the AI model at the core of all the recommendations that we give.
This is so interesting, and I appreciate you being on this show. Truly, so that you're firing off so many questions, but I can't ask you all of them because I don't have the time. But you use the term opinionated advice, which makes it sound human, like that's a human quality to have an opinion. So, in summary, how did you program that so that the opinion doesn't lead to a bias that then pollutes the process and the model itself?
Yeah, I mean, it's an excellent question. I think, first of all, we're never going to predict anything correctly, right? There is lots of risk in investing. We, as a financial advisor, I need to give 1,001 disclosures.
Right. Past performance does not
eliminate the bias. I like to think that taking a human out of the process, out of the advice process itself, eliminates a significant amount of the bias.
Okay.
Right? It allows us to systematically eliminate a bias when it appears. It allows us to remove as many conflicts of interest as we possibly can. We have an automated auditing system for all the advice that comes out. And so, I think when people think about AI, they're typically thinking about, these kinds of tools. I think they're typically thinking about, stock screeners or ways to run a back test on your portfolio, or maybe Motley Fool, right? There's a bunch of writers that say like NVIDIA is a buy, right? Or NVIDIA is a sell. But in reality, maybe it's a sell for you and it's a buy for me, depending on your risk preferences and the rest of your portfolio and your long-term goals, and whether you're focused on retirement or not, how much NVIDIA you already hold, your tax situation. There's so much that gets wrapped up into that. I think that's one side of it. I think the other way that people think about AI is ChatGPT or Claude or Perplexity, where you need to come prepared with your own questions.
Right.
But I think the main problem for people is that they don't know the right questions to ask. If you knew the right questions to ask, absolutely the tools are available. But it could be the case that the most important thing that you should do, according to our system in February, is take advantage of this tax loss harvesting opportunity, or like your downside protection has gotten way out of whack. Like you need to be adding some commodities to your investing strategy. Here's a ETF that aligns with your strategy. It could be like, I don't know if you have kids or not, but you have 2 kids, and you got to think about guardianship. That last time you looked at guardianship for your children was 2 or 3 years ago. Maybe your situation is different. At a minimum, just review it, check the box, and just make sure we're still good on that front. It could be that there's cash that's sitting on your retirement fund because once in a while, like they transition it to a different plan, and they notify you, but it's a buried email, and they sell out of your positions, and it's just sitting there in cash, not making money. Wouldn't you like to proactively get an alert saying, you should do something about this? I think that's the main benefit people get from the human financial advisor. I call it, call it proactive advice, opinionated advice. It's this idea that we are telling you something very specific that you should do proactively rather than reactively, which ends up being a lot of the other tools out there that aren't allowed to give you real financial advice. And I think it's that's the magic, actually. Like, I don't know if there's any other tools out there that will do that part automatically. And, I like to think that even though there's 1,000 investing apps, like we're still quite unique in this sense. And I think it'll be very difficult to replicate, right? It's not just that, a thin ChatGPT wrapper that gives the advice, right? There's sort of this whole massive macroeconomics portfolio management system underneath that generates that advice and then serves that up in a useful way.
So we've been talking with every guest who has something to say about AI for a couple of years now. ChatGPT hit the zeitgeist and everybody kind of woke up to this idea of AI, which to your point has been around forever, but now it's actually usable and people could get their head around it. And one of the industries that looked like it could really benefit from disruption with AI is the financial services model. And I'm so excited to have you on the show because you're convincing me that you have built in Portfolio Pilot just such an opportunity to, especially when you tell the story of how the industry leaders aren't interested in disruption. It sounds uncomfortable, but yet that's why a disruptor can disrupt, because they are asleep at the switch. I'm not saying that about any of my friends. I'm just saying industries in general. Historically, that's how a disruptor moves in. So I'm wondering, from my perspective, we have a few minutes left. How have you found the investor community, not the people that are using Portfolio Pilot, but the people behind that could help you to really realize your vision? Do they get it? And are they behind you? How has that conversation been for you?
Yeah, it's you're talking about venture capitalists, for example.
Yeah, if that's where you are now. Yeah.
I mean, we've raised a couple $1 million, right? Okay. And I mean, definitely, it's a little bit easier having successfully, run and exited another business.
Yeah.
I like to think that there's a whole bunch of lessons learned from the first go around that I'm not repeating this time around. I'm sure company number 3 will have a whole bunch more lessons learned. I think, in general, I think that angel investors, seed investors, VCs, the reaction has been extremely positive in saying, absolutely, this needs to be disrupted. There's a clear opportunity here. It's very unlikely that Schwab, turns around, fires 10,000 financial advisors and says, we're doing it, with AI from this point forward. The other fascinating thing is that the brokerages themselves, the self-directed brokerages, Webull, Robinhood, Public, even Schwab, they're not allowed to give advice inside the brokerage itself. And so there's a conflict of interest between being a broker dealer and a registered investment advisor. And so you, for a business like Fidelity or Schwab, they basically need this massive separation between the two different parts of their business. And so therein, I think, lies a big opportunity. I think if I get resistance to, from investors, we've raised what we wanted to raise, and I'm happy with that. We have some incredible investors backing us, a bunch of investors from my previous company backing us. Where the resistance comes, I think, is that it feels noisy, right? If I type in AI investing app into Google, I get 150 companies that come up. And so I think the biggest challenge for us, and the biggest thing we really need to prove, is how do we stand out from the noise?
Mm-hmm.
I think it's relatively easy if I can explain myself over the course of half an hour, but oftentimes you just get 5 seconds. And so, how do you really pack it in? There's something about, and I don't know, the amazing thing about Robinhood is that no fee trading is such an obvious idea that that by itself probably accounts for a significant part of their success. And I don't know if I've quite nailed that yet with Portfolio Pilot. There's something about your personal AI financial advisor, right? But are you really looking for that? It sort of implies that we're managing your money, not just giving advice. Opinionated financial advice, AI financial advice, a second look at your portfolio with AI. I think people are more open to the idea of optimization using AI. I don't think we're quite there yet that you can give your money to AI and manage it for you. But the idea that you can connect some of your accounts, real estate, stock options, whatever, and AI finds optimization opportunities, I think that is easy for people to understand and buy into. And then it's only $20 a month for something like this. That's crazy. And so I think that piece is finding that one sentence is actually a significant part of what will get us the next round and really scale and break out.
Love that.
Or maybe it's just a lot of podcasts.
Yeah. Well, let's hope this one moved the needle in that direction for you. If someone would like to learn more about predictions and Portfolio Pilot and you as an entrepreneur, where do they go? How do they find you online?
Selfishly, I think you should just sign up to portfoliopilot.com. It's free to sign up, no credit card to get started. At a minimum, there's sort of a free analysis tool and portfolio tracking, and then, only $20 to actually sign up for Gold, which is where you get this opinionated financial advice after a 2-week free trial. We've tried to eliminate as much of the friction as we possibly could in that onboarding process to give it a go. And then recently, we've been posting a lot on our YouTube channel. And so Portfolio Pilot YouTube channel, there's walkthroughs of the product and tutorials. And we've recently started this thing that we call Portfolio Pilot TV to try to get human bias eliminated, news updates and the things that actually matter in the macro. You'll never see anything about Taylor Swift on there. We promise. It's the news that actually cuts through complete. It comes from our models to try and figure out, what's actually interesting, in 60 seconds or less. And so, don't know if that's going to be a big success yet, but it's another one of those things that I want personally.
Right.
And there's too much bias in the media, and there's too much fluff. And just give it to me straight. I want to feel like I'm informed. All I want is the top 3 stories of the day. The ones that are truly impactful.
Wow,
we'll leave it there. I know we're running up against time.
Well, but
Rick, thanks so much for having me on.
Alexander, I said at the top of the show we had a good one planned. You exceeded, I think, all the listeners and viewers and my expectations. This has been so enjoyable. So thank you for carving out this time to be a guest on our show. I appreciate it.
Wonderful. You have a great day.
Okay. And thank you to the audience. You've been a part of Orange County's longest running business talk show. If you're a Orange County entrepreneur and you'd like to share your story, or maybe you're a nonprofit leader here in the county and you'd like to tell your story, then reach out to me on LinkedIn. I'm Rick Franzi. If we're already connected, send me a message. If we're not, send me a connection request. Between Haley, our producer, and myself, we can get you ready for a future episode of the show. We love to feature entrepreneurs and nonprofit leaders on a regular basis. Until the next time we have a chance to be together, I hope all of the decisions that you make move your company in a positive direction.